Hi, I'm Dan Littlepage on behalf of Snakk, and welcome to our regular shareholder update. To update us on Snakk Media's first half results, I'm joined by CEO Mark Ryan. Hi Mark.
Hi Daniel, how are you?
So tell us, how did the first half of the financial year finish up?
It was a busy first half of the year for us. We grew revenues overall by 13% year on year, up to 4.58 mil, which was the result of a lot of hard work. I think the most pleasing thing was that we saw an enormous reduction in our net loss. This time last year, we actually lost $2.19 million. And this year it's down to $250,000 for the 6-month result. Along with the reduction in overall net loss, last quarter, Q2, we actually saw a small EBITDA positive result of just over $50,000, which I think was a great signal for our shareholders and for the team that a lot of the hard work over the last 12 months is really starting to pay off for the business.
So Mark, can you give us a market wrap?
Yeah, it was a bit of a mixed bag for us out there. The Australian business, which is rapidly becoming very competitive, it's actually quite a mature market for us. We held our ground there. There's a lot of fighting to be done to capitalise on what's happening over the next year in this particular market. New Zealand grew very well. It was actually up 42% year on year. We expanded the team and saw some good results out of that market. And the big story for us was Southeast Asia. We came off a fairly low base, only about 4 to 5 months of trading this time last year, but the market grew almost 7-fold for us. Look, I think the important thing is that every quarter we're seeing strong growth. The numbers are getting bigger and bigger for us up there, and that's exactly what we want to see as we start to move further and further into that market where we have enormous populations and the mobile budgets are really starting to grow.
And if you had to pick up some of the highlights for the first half of the financial year, what would they be?
Look, there was a number of encouraging things occurred within the business this half of the year. Obviously, reducing our net loss was very important. I think that keeping our margins strong, reducing our costs overall and just driving our efficiency has really started to yield the results that we wanted to see. We actually had a number of changes at board level. We had Peter James come in as our new chair, Martin Regal as one of our new directors as well. Rejuvenating the board is also important. We're right at a tipping point. The business is in pretty good shape. We need to look for our next round of growth, and those guys will certainly help us at a board level to achieve that. Yeah, we also generated some new revenue streams. We launched Touch Create, which is our standalone mobile creative business. That team is doing very well received by the market, which is great. The work they're doing is winning some awards out there. We've been shortlisted for some APAC awards out of Singapore, and we also picked up a global honoree Webby Award for some work we did on Ubisoft, a game called Assassin's Creed, which is actually one of the world's largest game franchises. It just goes to show that right now the mobile technology, which I think Snakk has always been very good at putting into market, the actual creative units are becoming more and more important as well. So it feels like it's been a good move at the right time for us. We also picked up, for the second year running, a Global Best for Workers Award, which puts us in the top 10% for looking after our workers out of all the certified B corporations around the world, of which there's almost a couple of thousand of them now. A really good recognition of the programs we have running through the business. It's a war for talent for us out there. Again, the technology is important, the creative is becoming more important, but we need people to manage those relationships and do that great work, and it's important that we look after those people and attract and retain the best in market. I think we've been pretty successful at that to date. And obviously the growth in Southeast Asia has been a huge highlight for us. Again, we're coming off a low base. We've been up there for a relatively short period, but seeing that growth quarter on quarter and obviously moving Katie Birch, our APAC head of commercial, into that market by the end of this year. It's a really good signal to the market and to our shareholders exactly what we intend, which is to take advantage of what's happening in that market where there is hundreds of millions of people, and mobile advertising is really starting to grow, as we saw happen in Australia and New Zealand over the last few years.
So Mark, we're well into Q3 now. How's Q3 looking?
Q3 is busy. We obviously build to that all year. October was fairly hectic for the team. We saw a lot of work go through the door. More importantly, we saw a lot of campaigns filling in the pipeline. So November is also looking very busy, and of course we're just trying to work out exactly how busy December's going to be and whether that's going to flow through into January. Look, overall though, I think that the team's very focused. It's the time of the year where we really need to deliver flawlessly and set ourselves up as well for the run into the end of the year and also a strong start to 2016.
And Mark, looking ahead, what's on the horizon for Snakk?
In terms of Snakk looking ahead, we've got a very good strategy in place. We're going to continue finding the best talent out there, recruiting across sales, marketing, technology, trading. We're also going to continue to push hard into Southeast Asia, big focus for us in 2016. There's a lot of technology out there, particularly through the US and the UK, that we need to go through, try and understand what's most appropriate for the markets we work in, do the right deals with that technology and add it to our portfolio of very good mobile advertising technologies. And more importantly, we need to get out there and just keep pushing as hard as we can to get the business doing what it needs to do. There's also a lot of work within the company, particularly at this point for us, where we're investing into our internal systems, developing our IP and just making sure that internally we're as efficient as possible as the business grows out.